What if the next Palantir is sitting right in front of investors today, before Wall Street fully realizes it? Just a few years ago, many people viewed Palantir as nothing more than a government contractor. But then something changed. The company successfully expanded into the commercial AI market, unlocked massive operating leverage, achieved consistent profitability, and rewarded investors with extraordinary returns. Now the big question is, can another AI company follow the same path by 2026? Today, we're analysing 3 AI stocks that investors frequently compare to Palantir: C3.ai, BigBear.ai, and SoundHound AI. But this isn't about hype. We're going to evaluate them using the exact business characteristics that help Palantir become one of the most valuable AI companies in the market. And by the end of this video, you'll know which company appears most likely to replicate Palantir's growth story, and which ones still face major obstacles. Let's start by understanding what made Palantir so successful in the first place. The Palantir formula. Before looking at the contenders, we need to understand the benchmark. Palantir didn't become successful simply because it was involved in AI. Its success came from something much more important: scalable economics. The company built software that could be sold repeatedly without requiring proportional increases in cost. That created what investors call operating leverage. In simple terms, as Palantir generated more revenue, a larger percentage of that revenue flowed toward profitability. Another important factor was its ability to maintain software gross margins around 80% to 82%. Those margins gave Palantir the financial foundation needed to scale efficiently. It also consistently met an important software industry benchmark known as the Rule of 40, combining strong growth with strong cash generation. So if we're searching for the next Palantir, we're really searching for a company that can combine high growth, high margins, strong operating leverage, scalable software economics. Keep those 4 traits in mind because they're about to become very important. Let's move to our first candidate, C3.ai. The enterprise AI beat. C3.ai operates in enterprise artificial intelligence. Instead of providing a broad platform like Palantir, it offers pre-built AI applications designed for industries such as energy, manufacturing, utilities, and financial services. At first glance, that sounds attractive, but there's an important transition happening inside the company. Historically, C3.ai relied on large subscription contracts. Now it's shifting toward a consumption-based pricing model. Instead of paying a fixed subscription fee, customers pay based on how much computing power they actually use. The goal is simple: reduce barriers for new customers and accelerate adoption. But this transition comes with a cost. In the short term, revenue becomes less predictable. Contract visibility decreases, and quarterly performance can become more volatile. The company does have strong partnerships. Its relationship with Baker Hughes provides access to major energy companies. It also works alongside Microsoft Azure, Amazon Web Services, and Google Cloud. Those partnerships help distribution. However, there's another challenge. Unlike Palantir, C3.ai still relies heavily on professional services and integration work. That keeps gross margins below Palantir's level and limits operating leverage. So while C3.ai has opportunity, investors still need proof that its new pricing model can scale efficiently without requiring large amounts of additional labor. And that brings us to a company that looks surprisingly similar to early Palantir. BigBear.ai, the defense specialist. If Palantir's roots were in government and defense, then BigBear.ai is probably the closest match in terms of business focus. The company specializes in decision intelligence and predictive analytics. Its software helps military and government agencies analyze large amounts of complex information and make better operational decisions. BigBear.ai already works with organizations connected to defense and federal operations. That creates recurring opportunities and long-term contracts. But it also creates a problem. Government contracting can be slow. Procurement processes are complex. Budget approvals can create delays. And growth can depend on political and administrative decisions. Unlike Palantir, BigBear.ai hasn't had the same level of financial flexibility to aggressively expand into commercial markets. That's why its acquisition of Pangiam is so important. Pangiam brings biometric verification, facial recognition, and computer vision technology. This opens the door to commercial opportunities in airports, logistics networks, and security operations. The strategy is clear. Move beyond government services and build higher-margin software businesses. But executing that transformation won't be easy. Historically, BigBear.ai has generated a significant portion of revenue from labor-intensive services. To truly resemble Palantir, it must prove it can shift towards scalable software licensing. And that's a major challenge. But now we arrive at the company that many investors believe has the strongest structural similarities to Palantir's business model. SoundHound AI, the most interesting contender. SoundHound AI takes a completely different approach to artificial intelligence. Instead of focusing on enterprise data platforms or defense analytics, it focuses on voice AI. The company's technology powers conversational experiences inside vehicles, restaurants, and other customer-facing environments. What makes SoundHound particularly interesting is its technology architecture. Traditional voice systems typically convert speech into text and then process meaning afterward. SoundHound uses a different approach. Its technology processes meaning directly from spoken language. This reduces latency and improves performance in complex conversations. Why does that matter? Because it allows the software to handle more natural interactions while maintaining fast response times. And unlike many AI companies, SoundHound already has multiple monetization channels. The first is automotive royalties. Its technology is integrated into vehicles from companies including Stellantis, Hyundai, and Kia. The second is restaurant automation. Its voice ordering systems are used in drive-through operations and phone ordering environments. The third is voice commerce, where transactions happen directly through conversational interfaces. Now here's where things get really interesting. Among all three companies we're discussing today, SoundHound's gross margins are the closest to Palantir's. Its software is highly productized, and importantly, it can scale across millions of deployments without requiring a matching increase in engineering staff. That's exactly the kind of operating leverage investors look for. The company has also received strategic validation through NVIDIA's investment and collaboration. However, SoundHound isn't risk-free. To fund growth, the company has repeatedly raised capital through share offerings. That dilution increases the challenge of generating future earnings per share growth. Still, from a structural perspective, SoundHound appears closer to Palantir's scalable software model than the other candidates. And that leads us to the final verdict. Which stock looks most like the next Palantir? After comparing all three companies against the characteristics that made Palantir successful, the picture becomes clearer. C3.ai has a diversified customer base and valuable partnerships, but its dependence on integration services and the uncertainty surrounding its consumption-based transition create meaningful obstacles. BigBear.ai has strong positioning in defense and decision intelligence. However, its reliance on government contracts and services-heavy operations make rapid scaling difficult. SoundHound AI stands out for a different reason. Its software is highly scalable. Its margins are among the strongest in the group. Its technology is productized, and its projected growth rate remains significantly higher than the other candidates. That doesn't guarantee success, and it certainly doesn't mean SoundHound will become another Palantir. But based on business model structure, operating leverage potential, and software economics, It appears to be the closest match among the three companies evaluated today. The real question investors should be asking isn't whether these companies can copy Palantir exactly. It's whether they can build the same combination of growth, scalability, and profitability that made Palantir so valuable in the first place. And by 2026, we'll find out which of them is capable of doing exactly that.